Good morning, everybody. Welcome to another Daily Market Report brought to you by mikebjork. Today is Monday, and it's July 6th. Hope you guys had a wonderful 4th of July weekend here. We do got a couple items here on the economic calendar, so we'll just kind of jump right into it. So let's jump right into it. We got the first item here is the market services for PMI for the month of June. So anything below 50 on these two indexes is considered contraction. Anything above it is going into expansion. So we had a 46.7 back in May, and it improved a little bit to 47.9. However, the more weighted one, ISM Non-Manufacturing Index, also for the service industry, this is a little bit more heavily weighted, as this is kind of considered the gold standard in terms of these data. So this carries a little more weight. And in May, it was 45.5 or 45.4%, and forecast account for expense maturity at 51%. And it jumped up even higher than it. So we had a pretty hot number here at 57.1%, which is great news for the service industry, which is important primarily because that makes up the bulk of the U.S. economy is the service industry. So let's jump ahead here to the headline news, see how that plays out. And stock market is up. It did like that, but it's also kind of taking an optimistic tone. Even though we're getting more and more cases and some fairly high cases, numbers that are coming up on the COVID, but there is some optimism on the horizon. We are starting to see on global level that there are some improvements, and they feel that the U.S. could perhaps learn from some other countries that maybe are reopening, but not really having the spikes of the coronavirus. That maybe we might be able to pick up from them and maybe follow suit. They think that things will maybe temper down a little bit. China also has stock market is up, so it's kind of taking that optimism over as well. So Dow is actually up at 1.400, and it's kind of simmered down a little bit, but at one point it was actually up at 400 so far. Let's see how this is playing out in the bond market and what mortgage rates are doing. So we did kind of start where we were before. We're right about the 102.39 on the 2% coupon of the mortgage-backed securities, which only gives us approximately 2 basis points upwards. So it's not quite enough for any price changes, and it's actually just almost unchanged, really. So we're at the unchanged levels here. So let's kind of jump ahead to see what treasuries are doing. Treasuries are creating a little bit of pressure, as you can see on Friday, or Thursday rather. We had the 20 or 50-day moving average. We have this level here. And so far we open up above that. As you can see, we're getting a little uncertainty here, going with this kind of a star-wise here. And we'll have to see if we can continue above that rate, or just under 0.7% on the 10-year Treasury yields right now. So what does that mean? It means that, again, rates remain unchanged from our pricing from last Thursday. If you guys are looking to buy or refinance, please reach out. I'm going to leave my contact information below. Again, this video is my personal opinions, my personal experiences, and want to relay this to you, so it has no bearing on any company that I may be working with. And again, it does not represent them or their views of things, just what I've kind of learned and want to share with you guys. But if you guys are looking to buy or refinance and want to talk a little bit about how I can help you out, I work as a loan officer as well. I'll leave my contact information down below and in the description, and please feel free to reach out. Let's connect. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.